Hey, this is June from Turning Point Life Investment. This video is for the week ending in October 25th, 2008. So as usual, let's start off with the 3-year weekly view. Now, as you can see, this week we closed on a dark candle, which indicates bearish momentum. We still are pretty stretched out from the 20 and the 50-week moving average, but you can see we're building some kind of support around this area here. Stochastic isn't oversold yet, so that means there's still more downside to go. And same thing with the MACD, it's still pointing downward, so there's plenty of downside to go. If we do continue lower, these are probably the next target around here, mid 70s level. So that will probably get a good bounce, probably find some good support right around this area. Okay, next going into a 6-month daily, we had a very successful retest of this low right here, right around 84. This morning we tested it, touched 84, and prices basically went higher from there, from that point on. So it was more like a self-fulfilling prophecy where we retested it and then the buyers came in and bought right at that low. But based on the closing price, it wasn't that strong towards the close. As you can see here, this is the intraday price. We had a nice bounce from 84. We tagged 90, and then we had a little bit of sell-off towards the end of the day. So it wasn't a strong white candle as we'd like to see. But you can tell we're not really stretched out anymore. Not as much as we did back here from the 20-day moving average. Also, we're not oversold anymore, and the MACD is coming back to 0. So this is setting up for another potential downside in the market if we break this 84 level. So that's the level to be watching for if you're bearish. If this breaks, then expect to find support right around the mid 70s level, as we saw in the monthly view. Resistance, continue to look for resistance with the 20-day moving average. You notice how every time we came close to it, prices failed to break above it. So this will continue to act as resistance, this 20-day moving average, until proven wrong. Okay, so we just keep using what's working until it's proven wrong. Okay, same thing. This is an hourly view, 60-minute. Notice how now that we are trending, notice how every time it comes back to this 20-hour moving average, it fails to break above, right? It came back on Thursday towards the afternoon rally, failed there. A very large gap down on Friday morning, and then Friday afternoon towards the close we failed to break above this 20-hour as well. So once again, very critical support right here around the 84 level. Resistance look towards this gap right here, roughly around the 93. So that will be your first level of resistance, not to mention the 20 moving and the 50 moving averages as well. Okay, now going to the VIX, this is a daily view. Once again, right, moving averages is key. Notice how we are still trading above and it's finding support at this 20-day moving average. Now, very critical, we had several spikes above 70, but we never really closed above 70 until Friday. So Friday, prices closed above this $70 level, which indicates more bearishness, probably more bearishness to come for the market. Right, this is a very good consolidation pattern, somewhat like a triangle. Okay, stayed above this 20, broke above. So look for support maybe around the 70 if the market can somehow rally a little bit. Look for support around the 70, and especially this 20-day moving average. Let me remove that. So this will continue to act as good support for the VIX until it's broken. Okay, until we are able to close under. So with this high VIX, option premium continues to be high. So selling options is a great strategy right now to do, especially if you have stock. Selling covered calls it's pretty good, as far as premium is concerned, as well as credit spreads. Looking at the open interest, this is the open interest for the month of November. Looking on the calls right here, this is the open interest column. We really do not see any level that sticks out, at least not until 100. So I don't really see the market going back up to 100, at least not anytime soon. Well, definitely not by the next week. So possibly 95. You have 86,000 there as possible resistance. Now going into the puts, we notice that the $80 level right here, we have very high open interest. So there's a good chance that we might come back to 80 and get some kind of bounce based on this high open interest here. So overall, the market it's not looking too good. We broke out from this triangle here. Let me redraw that for you guys. we broke out from this triangle earlier this week. Okay, so this consolidation is over. Now it looks like we're having a new leg down. So potentially there might be some kind of support around 80, especially since it's an even number. But if that breaks, we can definitely head towards the mid 70s back in the 2002 lows.